Hi, I'm Ross from Smith 150 Group in Hamilton. Today I'm going to look at a simple tax tip, and it's a simple way that you can claim more interest, therefore reduce your profit and reduce the tax that you've paid. So obviously with interest we've got two parts. If you've got a personal house and you've borrowed money to buy that personal house, the interest is not going to be deductible. If we've got a rental property and you've borrowed money to buy that rental property, it is going to be deductible. So one of the easiest tips and tricks is looking at, do you have a shareholder's current account or a beneficiary's current account? And can the company or trust borrow money to repay you? The interest on that loan then being tax deductible, you then take that money away and put it into your personal house. So I'll go through a bit of an example and make it a little bit easier and explain that a bit further. So the first thing, like every time I review a set of financial statements, one of the first things I look at is what is the current account. So I glance through the balance sheet, or it can be called the statement of financial position. I look through the assets and liabilities and I look for shareholders' current account. So in this case, we've got $323,546 that this company, Smith Rental Property example, it should have probably limited on the end of it to be a true company. But yeah, if your company owes you $323,546, so that creates us a large opportunity. It means that we could potentially borrow $323,546 in this company. The interest on that would be tax deductible because it's relating to the rental property. It could then give you the $323,546 so that you can reduce your personal loan. So if we're looking at that from a tax point of view, look, at the moment we're borrowing, what, 2.79%, something like that. So that's about $9,000 interest a year. If you're on 33%, it's going to save you about $3,000 a year in interest. So a huge saving and a huge opportunity. So yeah, every time I review accounts, I look for that opportunity. When I send out finals letters to our clients, I identify that that opportunity is there. If you've got a debt on your personal home, that maybe we can restructure this. And restructuring this needs to be done correct, and we've got a certain process to do and a number of things to do, but it's relatively easy. There's not huge legal fees. It's not selling or buying a property. It's a relatively simple transaction that can happen, and it can really increase your interest deduction. So yeah, this example, 300,000 roundabout of loan, interest even at 2.79%, about 9,000 interest, saving about 3,000 in tax if we do it. So huge opportunities. If you're interested in learning more about this, watch out for our other videos and make sure you sign up for my newsletter. Also, we've got 3 great webinars coming up. I'll put the link in the bottom of this. We've got one on rental basics, all about trying to help people learn more about investing so they can invest for the first time. We've got an intermediate one about adding value and some good tips and tricks you can do. This is an example in there. And we've also got coming up later in June, developing and property trading. So if you want to learn more about property, make sure you like our Facebook page, sign up for our newsletter, and you'll get some of those invites through. So thank you very much, and hopefully you've enjoyed that information. Hopefully you'll see one of our webinars. Thanks.